Hi, I'm Don Mecoy. I'm a business news reporter with the Oklahoman, and I'm joined today by Brian Puckett. Brian is a principal with the Puckett Financial Advisors here in Oklahoma City, and we had a really interesting day on the stock market today. The Dow was down 777 points, had its worst point drop ever, the worst percentage drop that it's had since 1987, that black day in 1987 when the Dow went down 20%. Why did the markets react so strongly to Congress's failure to pass this bailout package?
Well, I think a number of things. I think that the markets really, or the people that participate in the markets really understand that we have a need for help from the government to get liquidity back to grease the system. And in general, markets hate uncertainty, and this just adds to the tremendous amount of uncertainty that we've been seeing in the financial markets. You know, for weeks, we've seen the whole landscape of Wall Street change in the past 10 or 14 days. And so it's just uncertainty on top of uncertainty, and then it's a failure of what everybody, I think, really anticipated would be at least some sort of help from the government to get the credit markets back functioning again, Don.
Do you think it's going to take some sort of a package out of Congress before the markets really begin some kind of recovery, before it finds a bottom?
Well, yeah, I think at this point it's going to take some form of governmental help, and I think that there's a lot of resistance from various parts of the country. You know, what is government's role to come in and step into the free market system that we've worked so hard to build? But at this point, the fact of the matter is that the credit markets are not functioning properly, and we as a country need a properly functioning credit market system for the welfare of everybody, for the welfare of, you know, this is not, at least at this point, just a Wall Street problem. I mean, we need a properly functioning credit market system for the health of businesses, for both long and short-term needs. We need you and I need credit available if we want to go buy a new house or maybe buy a new car. And don't get me wrong, you know, too much debt is, is a negative, but we've got to have at least some sort of measured amount of debt available for the properly functioning of the economy. And so it's not just Wall Street, it filters all the way down to Main Street. Businesses need loans to make payroll, for instance, and you and I need to, get our paychecks. And
so there's a chance, I guess what you're saying, you think there's a chance, a danger that this disarray in the financial markets could actually spread to the wider economy?
Oh, without question.
Okay.
Without question.
And so you think, you feel like a rescue package is needed, and that they're going to have to do something to keep this from spreading?
I do, but I think that we ought to look at really, I think that a lot of what's happening is there's a lot of finger pointing, and I think that the term, with all due respect, rescue package or bailout, these terms, for me, they don't settle well with me, and I don't think that they settle well with a lot of Americans. We're all grown-ups, and we all need to behave as grown-ups, but what got us here is not as important as what's going to, get us to a better future. And I think that now is a time to really start working together to make that happen. Yes, I do believe that some sort of governmental help is necessary at this time, but like the quote bailout of AIG a week or so ago, when I heard about that, I was like, what are we doing as a country coming in as taxpayers bailing out the largest insurance company in the world? And I was like, I completely understood why in general taxpayers would be upset about a bailout of the largest insurance company in the world. But then as I started to look at the widespread implications of our failure to help in that situation, combined with the fact that I think the government did a pretty good job of negotiating a pretty tough deal with AIG, that I believe the taxpayer actually may benefit by the AIG package. They're going to be required to pay 11% interest, and they can lose up to 80% of the company, and we as taxpayers can gain 80% of the company, and it's a company with lots of very valuable assets. So yeah, I think that some sort of governmental help is necessary. I think that it needs to be done with accountability. I think that it needs to be done with oversight. I think that it needs to be done in a fiduciary environment, meaning that the people that are running the entire situation obviously owe a duty to maximize the value that comes back to the taxpayer that's helping to fund the whole thing. And I think that it needs to be done in that light. I think that it needs to be done where there aren't any sweetheart deals that are struck between the people that are running the show. You know, this quote bailout or rescue package is just going to be the beginning of a long process. If we can go back to the last thing that I remember anything like this was when the Resolution Trust Corporation in the late 80s and the early 90s took over all these troubled assets and then began the process of selling those off. And I think that
that was a fairly successful process, was it not?
It was a fairly successful process, yes, and it was done in a fairly orderly fashion. But as we go back and look at it, we see that there were way too many sweetheart deals that were struck between the people in charge and, quite honestly, some of the people that were inside some of the savings and loans that were failed in the first place. You know, all these buddies got together and, hey, I'll make you a deal on an office building in St. Petersburg. You know, I don't think any of that can go on. I think that if there are deals to be made and profits to be had, they need to flow back to the good tax-paying citizens of our country.
Okay, well, let's talk about these tax-paying citizens who own stocks and own IRAs and are in 401ks and mutual funds, and they're shocked to see what's happening. What's your simple, basic advice for those folks?
Well, you know, now is no time to panic. Although this is a very serious situation that we're going through, markets always recover. Nonetheless, I think that now is no time for amateurs. Now is no time for operating your financial situation with lack of a plan. If you don't have a plan, get one. If you do have a plan, review that plan. Make sure you know what you own, why you own it, how bad it can get through some of the worst times that we've seen, how good it can get, what it's likely to do for you. I think that a lot of people may be engaging in, may own things that they don't really understand, may be engaging in an investment strategy that has more risk than they ever really anticipated. And so, you know, I guess in simple terms, what I'm saying, Don, is it's a time to know what you own, why you own it, when you're going to need the money from it, will the money be there? You know, have an to the extent possible, have an ironclad strategy so that you know that when you do need to take money out of your long-term savings program, that a sufficient portion of it will be there to fund your ordinary monthly living expenses.
Mm-hmm. Okay. So. Well, thanks for the free advice. And thanks for joining us today.
All right.
And obviously there's a lot of news, and we'll have more in the Oklahoman. We'll have more here on News OK. And maybe we'll have Brian back again sometime to talk to us. Thanks for viewing today.